Most fintech companies promise to revolutionize banking, but very few actually become real banks with their own charter. Today, I'm breaking down the full story of one company that did exactly that, SoFi Technologies. From a small student loan refinancing startup founded at Stanford in 2011, to a complete digital bank with over 14 million members, record revenue growth, and a powerful technology platform powering other fintechs. This is how SoFi is quietly building one of the most complete financial ecosystems in America. SoFi is a mobile-first digital bank that offers almost everything you need in one app: checking and savings accounts, personal loans, student loan refinancing, mortgages, credit cards, investing, retirement accounts, and even crypto. Unlike most fintech apps that rely on big banks as partners, SoFi owns its own national bank charter. That single advantage lets them gather deposits directly, fund loans at lower cost, and control the entire customer experience. SoFi was founded in August 2011 by a group of Stanford Graduate School of Business alumni. Their original idea was simple but powerful. Recent graduates were paying way too much interest on their student loans. SoFi started by offering better rates using smarter data-driven underwriting. From 2012 to 2018, they expanded into personal loans and mortgages. In 2018, Anthony Noto became CEO and accelerated the company's diversification. Key milestones included launching SoFi Money, banking, SoFi Invest, and acquiring Galileo in 2020, a major payments and banking-as-a-service company. In 2022, they finally obtained their own national bank charter, becoming SoFi Bank N.A. Anthony Noto is one of the biggest reasons many long-term investors are bullish on SoFi. Before joining the company, Noto had an extremely impressive background. Former Goldman Sachs executive, former CFO of the NFL, and former COO of Twitter. He brought operational discipline, Wall Street experience, and long-term strategic thinking. Under Noto's leadership, SoFi stopped thinking like a niche lender and started thinking like a full financial ecosystem. Instead of depending primarily on loan originations, the company began building multiple revenue engines: banking, investing, financial services, infrastructure software, payments technology, and enterprise fintech solutions. Noto also pushed aggressively toward vertical integration. And that led to one of the most important acquisitions in company history, Galileo. In 2020, SoFi acquired Galileo for approximately $1.2 billion. At the time, many investors didn't fully understand the acquisition, but strategically, it was massive. Galileo is a banking and payments infrastructure platform that powers debit card issuance, payment processing, digital wallets, account infrastructure, and fintech applications. In simple terms, many fintech apps run on Galileo's infrastructure behind the scenes. Later, SoFi acquired Technisys, a cloud-native banking core platform. Together, Galileo and Technisys created a powerful technology stack. This transformed SoFi from just a consumer-facing fintech into both a digital bank and a fintech infrastructure provider. That diversification matters enormously, because infrastructure revenue is recurring, sticky, scalable, and less cyclical than lending. In 2022, SoFi officially obtained its national bank charter. This was arguably the single most important milestone in the company's history. Before the charter, SoFi depended heavily on external funding sources and partner banks. After the charter, they could gather deposits directly from customers. That dramatically lowered funding costs. Deposits exploded, growing into tens of billions of dollars. This gave SoFi stronger net interest margins, greater balance sheet flexibility, more control over lending, improved profitability potential, and reduced dependence on external institutions. This is where SoFi began separating itself from many fintech competitors. SoFi now serves approximately 14.7 million members with 22.2 million products. Their member flywheel is working extremely well. They acquire customers with one product, then cross-sell them checking, investing, credit cards, and more. In the latest quarter, they delivered record results, strong revenue growth, improving profitability, and massive deposit growth. Their loan platform business is also scaling fast and becoming a high-margin fee generator. SoFi sits in a very unique position inside the fintech ecosystem. Compared to traditional banks, SoFi operates with a much more modern digital-first structure and lower physical infrastructure costs. Compared to other fintechs like Robinhood or Block, SoFi is far more diversified. Compared to PayPal, SoFi owns a bank charter. And compared to many Latin American fintechs, SoFi has greater exposure to high-income U.S. consumers with strong credit profiles. This combination of a bank charter, high-quality customer base, full financial ecosystem, and powerful technology platform gives SoFi durable competitive advantages that are very hard to replicate. Of course, it's not without risks. SoFi is still somewhat sensitive to interest rates and the overall economy. International growth is still early, marketing spend remains high to fuel growth, and the valuation is elevated. Execution across so many new products is also complex. SoFi has successfully evolved from a student loan startup into a profitable, scaled digital bank with multiple revenue engines. With strong member growth, rising cross-sell, a powerful tech platform, and early leadership in areas like stablecoins and AI financial tools, SoFi is well positioned for the next decade of consumer finance. If they continue executing, they have the potential to become one of the leading digital financial platforms in the US and potentially beyond. If you enjoyed this deep dive into SoFi, smash that like button, subscribe, and turn on notifications so you never miss the next fundamentals breakdown. This is for educational purposes only and is not financial advice. Always do your own research before investing. Thanks for watching. I'll see you in the next one.